Money is one of the most fundamental aspects of modern life, shaping our decisions, lifestyles, and economies. However, despite its central role, most people don't fully understand the complexities of how money functions in the world. From inflation to the creation of money itself, there are several fascinating facts about money that will change the way you think about it. These truths shed light on everything from economic policies to the hidden forces that influence how much we spend and save. Let's dive into some mind-blowing facts about how money works and unravel the mysteries behind this powerful tool. 1. Money is essentially created out of thin air. It may sound unbelievable, but money isn't as tangible as we think. Banks create money out of thin air through a process known as fractional reserve banking. When you deposit money in a bank, they don't just keep it in a vault. They lend most of it out to others, which creates new money in the economy. The central bank can also inject money into the economy by printing more bills, though it mainly does this through electronic measures such as quantitative easing. In both cases, money isn't physically printed or minted but rather generated by financial systems and institutions. 2. The US dollar is the world's reserve currency. The US dollar has held the status of the world's reserve currency since the end of World War II. This means that it is widely used in international trade, investments, and held by central banks as a part of their reserves. In fact, more than 60% of the world's currency reserves are held in US dollars. This global dominance allows the US to borrow at relatively low interest rates and increases the value of the dollar. However, it also means that the US economy plays a huge role in shaping the global financial landscape. 3. Inflation reduces the purchasing power of money over time. Inflation is the gradual increase in the prices of goods and services over time. Historically, inflation averages around 3% annually, meaning that a dollar today won't buy as much in the future as it does now. The value of money erodes over time, which is why people seek ways to invest and grow their wealth to keep up with inflation. For example, if inflation is at 3% a year, $100 today will be worth only $97 in purchasing power next year. This is why it's important to make strategic financial decisions and invest in assets that outpace inflation. 4. The concept of compound interest makes money grow faster than you think. Albert Einstein famously referred to compound interest as the eighth wonder of the world, and for good reason. When you earn interest on your investments, the interest itself starts earning more interest. Over time, this creates an exponential growth effect. For instance, if you invest $1,000 at a 5% interest rate, in 1 year you would have $1,050. The following year, you would earn interest on the $1,050, not just your original $1,000. The earlier you start investing, the more your wealth can grow, thanks to the magic of compounding. 5. Central banks control interest rates to influence the economy. Central banks, such as the Federal Reserve in the US, control interest rates to regulate the economy. When interest rates are low, borrowing is cheaper, which encourages people to spend and invest. Conversely, when rates are high, borrowing becomes more expensive, which typically slows down spending and can help control inflation. This central bank policy is one of the most powerful tools used to stabilize and grow economies, influencing everything from mortgage rates to car loans and business investments. 6. Money is a social construct, its value depends on trust. At its core, money is just paper, or digits on a screen, that has value because we believe it does. The value of money is largely based on trust that it can be exchanged for goods, services, or other currencies. Historically, many societies used items like gold, silver, or livestock as money because these had intrinsic value. Today, most money is fiat currency, meaning it has no inherent value beyond what people agree it is worth. As long as people trust the currency, it will continue to function as money. 7. The rich get richer by leveraging debt. One of the key reasons why the rich continue to build wealth is by using debt as leverage. While most people are taught to avoid debt, the wealthy often use it to grow their wealth. For example, they may take out loans to invest in real estate or start businesses that generate more income. Because the wealthy can access low-interest loans, they can use debt to earn higher returns than what they pay in interest. This leverage allows the rich to build wealth exponentially, whereas most people only use debt for expenses, not investments. 8. Digital currency and cryptocurrencies are redefining how we see money. In recent years, digital currencies like Bitcoin, Ethereum, and others have completely disrupted traditional financial systems. Cryptocurrencies offer a decentralized, peer-to-peer method of transferring money without the need for banks or middlemen. These currencies operate on blockchain technology, ensuring that transactions are secure and transparent. While still volatile, cryptocurrencies have begun to gain acceptance by mainstream investors and companies, and they may eventually challenge traditional currencies. 9. The wealthy don't pay taxes the same way you do. The rich often use tax avoidance strategies that the average person doesn't have access to. Wealthy individuals often structure their wealth in ways that minimize their tax liabilities, such as through investments in real estate, stocks, and offshore accounts. They also make use of tax deductions, tax credits, and other loopholes that allow them to reduce the amount of income subject to taxation. While this might seem unfair to some, it's legal, and it's one of the reasons why the wealth gap continues to widen between the rich and the average person. 10. The wealthiest 1% own over 40% of global wealth. According to reports by major financial institutions, the top 1% of the world's population controls more than 40% of the global wealth. This staggering statistic is a result of several factors, including asset accumulation, business ownership, and capital investments. The ultra-wealthy have the resources and opportunities to invest in high-return assets such as stocks, real estate, and private equity. These individuals are often able to use their wealth to make more money, creating a cycle that further amplifies their financial success. This concentration of wealth is one of the biggest challenges facing economies worldwide and contributes to increasing inequality. Understanding how money works is essential for anyone looking to improve their financial situation. The complexity behind money's creation, its role in the global economy, and how the wealthiest individuals manage it is often surprising. From compound interest to the power of leverage, there are many aspects of money that can help individuals build wealth when used strategically. Additionally, the rise of digital currencies and tax avoidance tactics used by the rich challenges our conventional understanding of finance. To truly harness the power of money, we must learn how it functions and utilize its potential to work in our favor. Whether you're looking to invest, save, or simply understand the world of finance better, these facts can serve as a guide to mastering the art of managing money.